The global economy is suffering a huge recession as a result of inflation. Popular stock expert Chamath Palihapitiya thinks that most businesses will experience major drawbacks because of this, and he may just have something for Tesla investors. Hey guys, welcome back to Everything Tesla Stock. It's no longer news. Tesla's cars have increased, production costs have gone up, and the competition is getting stronger by the day. Several times in the past months, Tesla's CEO Elon Musk has admitted to the harsh effects of inflation on the EV company, which has caused its production and delivery rates to slow down. With the prices of raw materials constantly soaring, Tesla and other EV companies may need to get prepared for a bumpy ride in the coming months. Speaking in a recent interview, CEO Social Capital Chamath Palihapitiya reveals scary expectations for Tesla and why investors may want to sell their shares before the big crash. Keep watching to find out the details. Before we get going though, if you like this type of content, don't forget to hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Canadian venture capitalist and CEO of Social Capital, Chamath Palihapitiya, has shared his fears concerning the recent global recession, which has greatly affected businesses like Tesla. Tesla has been struggling amidst inflation crisis, and despite the efforts to increase production while limiting costs in the best way possible, the car maker still struggles to keep its head above the water. In spite of the already devastating economic conditions, Chamath Palihapitiya has said that the global recession has yet to come, and businesses are going to face severe recession in the upcoming years. Chamath Palihapitiya is no newbie in the financial world, and investing too, and that's probably one of the reasons why he won a spot on the Forbes list of billionaires in 2021. And so his recent warning may be worth some attention. Be sure to stick around until the end of the video to see why Chamath Palihapitiya thinks that Tesla might not be a good buy at the moment. According to the stock investor, the recession will come in two phases, which are the supply side and the demand side recession, with the global economy currently in the first phase, and without proper measures in check, it could progress into the second phase. Speaking in detail, Palihapitiya said that the global economy will have to go through a process of taking out all the excess money that's been put in and destroying demand before the second phase of the recession can begin. This phase, which the stock investor believes will be signaled by more people being motivated to re-enter the workforce, credit delinquencies, and lowering of individual savings, will lead to a point where equities get under pressure. In 2021, Palihapitiya stated that in an interview, the upcoming economy is at the beginning of a great financial crisis, which will have enormous effects on many companies. Speaking on the monetary policies at the time, the venture capitalist said that the excessive printing of money will lead to an increase in asset pricing. He further explained that the resulting effect of this will be a rampant increase in the cost of commodities, which have no way to get back in check. Expect some real government changes and policies that need to be put in place. The investor cited the true supply and demand cannot be known, with excess money in circulation, and it will eventually lead to a point where prices and expenditure increase while income and revenue keep plummeting. Judging by Palihapitiya's illustration, it is obvious then that Tesla needs more than just announcements, but also actual execution to survive the crisis. Elon Musk himself has admitted to the harsh effects of inflation. In June, the cost of most commodities increased by more than 9.1%, and in the same month, Tesla increased the prices on all of its car models, with as much as a $6,000 increase on some of its products. In May, it was estimated that EV batteries will spike by 22% in the next 4 years, which will possibly cause more hikes in the price of Tesla's car. This Model 3 is already being sold for about $40,390, up from $10,000 from its previous price. Likewise, the Model X Plaid, Tesla's most expensive car, is now being sold for $130,000. For someone who had plans to buy one of these cars, you may want to give it a second thought. Although Elon Musk has said that he plans to sell an electric car for as low as $25,000 in an effort to make EVs more accessible and affordable, but following the recent increase in production costs, the CEO soon announced that that plan was on hold for now. Do you think Tesla will eventually reduce the prices of its cars? Let us know down below. While addressing the issue of rising costs, Musk admitted that it's been very difficult to keep the prices of products within a minimum range with inflation. at a 40 or 50-year high, and its suppliers requesting 20 to 30% cost increases for parts from last year to the end of this year, so there could be a lot of pressure there too. Clearly, the EV company is experiencing some very hard times, which may be difficult to overcome if drastic measures are not taken. Musk said that although it may seem unreasonable to increase the prices of Tesla's vehicles given the record profitability earlier this year, it is rather unavoidable. He added that there is a long wait list for these vehicles, and that may extend to next year, given some of the vehicles that will still be ordered. We may say that Tesla took a rather tough measure to manage inflation, especially for its consumers, who will have to bear the brunt of the price hike. But taking a second look, the automaker may have just done what it had to do. The company does not control the macroeconomic environments, which, as Palihapitiya has said, are major detriments of business performance. Musk revealed that the government keeps printing excess amounts of money, and there are no significant increases in lithium extraction and refinement. Prices of products may continue to go up, if that remains the case. At the moment though, there is a limited amount of production and supply of these new raw materials, which has caused companies to compete for the various resources available. Tesla's CFO, Zach Kirkhon, hinted that although the company is not immediately affected by the rising cost of raw materials, the cost pressures could mount once its contract runs up with suppliers. Tesla may be facing enormous supply challenges, seeing that Musk had previously complained about the impact of supply chain constraints last year, describing them as the most difficult supply chain challenges that Tesla has ever experienced. And with the recent inflation crisis, things may get a little bit more different. In fact, these supply and production cost issues may be more than what the public sees, since Musk claimed that the official numbers are actually understated and the true magnitude of inflation is yet to be known. The solution here will therefore be for inflation to reduce. As Musk has said, Tesla can lower the prices of its cars if inflation calms down, so let's hope it does. Also, the CEO added that the current pricing is only anticipating the probable growth in Tesla's costs, and if it does actually materialize, prices could significantly reduce. Palihapitiya is not entirely bearish on Tesla's stock performance. In fact, he's rather bullish on the company and its stock, and believes that Tesla's got the capacity to survive the coming economic crash. He believes that Tesla's technological experience and sophistication is second to none, and really most Tesla enthusiasts are going to agree with him. The stock investor once described Tesla as a company that has been growing, taking risks, and finally found the product that will unlock its market growth, which is the Model 3. We can agree with Palihapitiya on this one, since Tesla's Model 3 sale has been incredible since its release. Also, the investor believes that Tesla is a clear winner in electrification and its substance is irrefutable. Speaking about Elon Musk, Palihapitiya said that although the Tesla executive may be called out for not meeting many of his project's deadlines, Musk is still living up to what he signed up for, which is to commercialize electrification with an experience that surpasses that of its competitors. Tesla isn't just standing by and waiting for things to escalate. This would not only spell doom for the company, but also its investors. And so to mitigate the effects of inflation, Musk has said that Tesla is working with its existing suppliers to determine how it can accelerate production of raw materials as quickly as possible. It is obvious then that the EV maker is unwilling to go back down on its quest to promote transition to sustainable energy, even with the current inflation constraints, and it could eventually live through the financial crisis if efforts are focused on limiting supply costs and meeting the rising demand. However, even though Palihapitiya said that Tesla is maturing under enormous demand, he still warns about the economic crisis and what it may have in store for the company's stock. He stated that for common stocks like Tesla, the stock performance is not controlled by the owner of a business or its executives, but rather by market policies and unavoidable market constraints, and so individuals may need to get their facts right before investing in a stock. Likewise, Rivian CEO RJ Scaringe warned that the EV industry is likely to face a devastating shortage of batteries for electric cars that could further aggravate the computer chip shortage. What's your take on Chamath Palihapitiya's warning? Do you think Tesla can survive the upcoming inflation crisis? Let us know down below. Then you can go ahead and click on this next video on your screen. See you there.